Another Whiteboard Wizards video. This one will be taking you through how to manage your risk, specifically using a stop loss. Now this I believe is one of the biggest things you need to learn when you want to trade, how you want to protect your capital. A lot of times, a lot of new traders will tend to make a lot of money in their first trades, and then they lose all of that as the week or as the trade progresses. So taking you through it, first we'll go through swing trading and sort of daytime or sort of scalp trading. Starting off with the swing trading, we'll take you through it now, show you how you can use this stop loss to essentially lock in some profits. If the market does look to return or retrace, you will be taken out, but at least have some profit in your account. Also to use this to lock in some profits and also leave what we call a runner trade open to potentially have some more funds, but at least knowing you're secure in case something does happen. So first of all, we'll start off with a simple swing trade using something like a head and shoulders. So just your basic head and shoulders. Obviously we know the market comes up, creates that left shoulder, creates the head. We do know we have these support / resistance areas over here. Market comes down, comes back down to the neckline, pushes up to create that shoulder. Now what a lot of people like to do here is they would like to take a sell position on the shoulder. Obviously we know this is a runabout, a resistance area. So take a sell position here. And now we wait for the market to go down. So position right over here. And obviously your stop loss will be roundabout just, I would say, above this area, depending on the interior structure of the shoulder, or depending on the height of these shoulders as well compared to each other. So market starts to move down. And now we have, a lot of people do like to take some profits around this area as well, but moving to the stop loss, we see the market break past, usually creates a bit of resistance or consolidation around the zone, and starts to push back down again. What we can do now is we can have this stop loss that we had up here, we can now move it back down to the zone over here. So this then essentially gives us this whole section over here of profit. So this, in case the market does decide to turn around, go back into the zone, make this head and shoulder sort of invalid, we do know at least we have some sort of profit locked in as well. But if the market does continue, we know we can get more of the move, and we still did have that safety net as well. Now what a lot of people like to do here is, now that they do have this extra profit that they do have locked in, they can also enter here with another position, knowing that if it does happen, at least they'll also still have that profit. So you can take another sell position right over here once this neckline has been broken, and then sort of follow it with some of the things. If you look for like a consolidation zone, we see a break of that zone, again moving both your stop losses, or if you didn't enter that position, move them back down again to this level over here to lock in a larger size profit. And then as the market continues, eventually when you hit your overall target, take both those trades. Make sure to take those trades, have those targets set up to know when to enter and when to exit the market. So before you enter that trade, know where you want to exit, whether it goes against you or whether it takes profit. So that's a basic, simple example of how to use it via swing trading. Now obviously the consolidation zones can be similar to a head and shoulders. Sorry, not a head and shoulders, a double top. So it's essentially the similar structure, which is technically a slight consolidation. Now if you push down, if you had a position to the upside, the market does this sort of double top and it does break, we can sort of call it consolidation. And then again moving your stop losses from the lower position back up again to here. So just a simple examples with the swing trading. Now with shorter time frame trading, we're looking at more candlestick structures, so we don't really see these head and shoulder structures. So this is a bit of a different way of doing it. So you need to understand more of how the market moves in shorter time frames, know when to trade specific time frames. Now as we know, if you're a swing trader, you're not looking for a specific time because you're waiting for the market to move into your positions, as to where if you were sort of a short-term trader, you're waiting for volume in the market and movement in the market before you enter. So a little bit different, bit of a different psychology, a different trading style. So again, we'll go through a basic sort of system, what we're looking for. Now usually if you are in we had a sort of let's say a slight consolidation, you're waiting for this market to open, so you had a nice beautiful candle to the upside, market open is on its way. We can see we have a couple of candles sort of rejecting a zone, again making some nice wicks, testing, and we can now start to see some nice sort of a consolidation zone forming. What we see now is we see a break to the upside, and you obviously started entering your trade. So entering the trade when the break happened here, so we have our position, just using different color so I don't confuse you too much. So you had your buy position as we broke that high, obviously stop loss just below this section over here, and now the market starts to move to the upside. Now what we look for now is essentially when the market starts to create an area where we're looking for either a pullback, what we also like to call liquidity wick. Now we'll talk about this more. I'll make other videos in this explaining what all these things are, but for the time being I'll just show you how these sort of what we're looking for. So now we have these two candles forming. We can see in a shorter term time frame these will essentially create a slight support / resistance area. Now using these wicks as well, these are also considered a zone, so a slight little zone in these wicks. Now if we have something like GBP, JPY, we know these wicks always do tend to test support / resistance areas. Now we have the open of this candle, we start to see it push back down, and it retraces and continues further up. Okay, so now the market retraces, create this nice long wick testing the zone we had. We see, okay, that's a nice strong support zone for us to have. What we can do now is take the stop loss and move it round about, just either in the zone, above the zone, wherever you feel. Looking at the market, depending on how it reacts, what the strength of the upside is, you can determine where you want to place it, but usually inside of the zone. Let's just say for the time being by this, where this wick sort of tested. Now we have this nice big chunk of profit locked in. This chunk of profit locked in over here. If you see your stop loss, if you see another opportunity to take a position over here, you can do so, knowing that if something does happen, at least you'll either be break even or have a slight bit of profit. But at least we now have this section locked in. If the market does decide something was to happen, knowing this is for a shorter term time frame, the market can be very unpredictable, so we have to be very aggressive in managing our risk. If it does return, at least we did lock in some profits. But if it continues, that's great. Also need to know where you want your take profit to be. Keep that in mind. Either way, swing trading, short term time frame, have a target to take for. Always protect that capital. But that's the basics of using a stop loss, of how to manage your risk, how to lock in some profits, keep it safe. I hope you enjoyed it. Give us that thumbs up if you did. Click that subscribe button, followed by that bell icon for any more awesome new videos that we release. Make sure to be the first to know of it. And if you want to get in touch with us, feel free to do so. Email us at support@blackbullmarkets.com. We'll be happy to help. Stay tuned. Thanks for watching.